The more planning, the more due diligence that you're doing, the more that you do create your own map and really, do a mind map about what you're doing and look at the different asset classes and how they perform, and you're diversifying, then you've got a pretty good chance of doing well.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
How's it going, everyone? And welcome back to another episode on Wealth Strategy Secrets of the Ultra Wealthy. Today's episode is a must-listen for anyone who's looking to break free from the Wall Street roller coaster and take back control of their financial future. I'm joined by Kaaren Hall, a true trailblazer in the world of self-directed IRAs and the founder of UDirect IRA Services. For over a decade, Kaaren has empowered thousands of investors to unlock the power of their retirement funds, enabling them to invest in what they know and believe in: real estate, private credit, precious metals, syndications, and even cryptocurrency. We talk about the myths of diversification as it's sold by Wall Street and dig into what real diversification looks like across non-correlated alternative assets that offer better control, transparency, and yield. You'll also learn how to avoid costly tax traps like UBIT and UDFI and how to structure your investments the smart way. If you've ever wondered how to reposition idle 401k funds or IRAs into vehicles that actually move the needle for your wealth strategy, this episode will show you how. Let's dive in. Kaaren, welcome to the show.
Thanks, Dave. Happy to be here. Always love talking about self-directed IRAs.
Yeah, really great to have you on the show. And I think the investors are definitely in for a treat and are going to learn some things today, especially in light of this trend that I think has really been going on for at least a decade, where investors really want to take more control of their financial future. And they're tired of the stock market roller coaster. They're tired of typical stock market fees and financial planning fees that frankly are not really moving them ahead, right? Because as we know, according to SPIVA, it's only less than 88% of financial advisors aren't even actually beating the indices. So, what are you actually paying for? So I think that this concept of self-directed IRA is really a fantastic way for people to start to diversify, right, from the stock market and get access to different alternatives, things that people really believe in and things like that. So before we kind of jump into some of the, tactics and strategies and how to really unpack how you can do that the best way, tell us a little bit about your background and how you actually, created your own firm.
Right. Well, I was in the mortgage industry for a long time, real estate and mortgage, doing all kinds of things. I was in my 20s, I was a realtor, and then I got into property management, ultimately made the way into mortgage loan servicing for a number of years, and then loan origination for a number of years. And it taught me so much about, the real estate as an asset class, real estate and notes as asset classes. Those are alternative assets that our account holders love to invest in. So I had a very firm foundation in the main asset classes self-directed IRA investors love. And most of things also like syndications are tied to real estate, even though they aren't the brick and mortar themselves. So it really gave me a good firm foundation to help our account holders through the self-directed process. And so in 2007, I worked for another self-directed IRA firm. And in 2009, I founded UDirect IRA Services.
Yeah, that's really fantastic. And, given your experience, right, since founding the firm, how has the journey really evolved?
Oh, well, I think, just like anything, any startup, it's, hit and miss kind of thing. But we always looking for what are people interested in? In other words, what is it about self-directed IRAs that can help people, and then communicate that out to the wide world. I think people, like you mentioned, there is a real need to find a better return on your investing. I love how you mentioned the fees that Wall Street charges, and a lot of them you don't see. Like our fees are right up front and they're super low, especially compared to what Wall Street charges. And we're not taking a fee of assets under management. You know, some financial advisors get paid a percentage of your portfolio, whether you're making money or not. And that is an interesting, like business plan there. But that's the way it's been for a long, long time. Self-directed IRAs, like you say, have so much more control. But of course, there's a catch. You have to educate yourself to be a self-directed IRA investor. You have to be able to understand the underlying asset, know how to do the due diligence on these assets so that you're making a good decision. Because when you invest using self-directed IRAs, it's entirely your responsibility. If it doesn't go well, it's not someone else's fault. Do you know what I mean? You're taking full responsibility like an adult, you know. But I mean, this is how we have to think. Sometimes it is someone else's fault, but not with a self-directed IRA. It is truly self-directed. You're making those decisions. And so just make sure you've educated yourself so that you're making a wise decision. And that is really the first step to self-direction, is understanding the asset sponsor, talk to other people who've invested with them. If you are in fact investing with a third party, understand what the underlying asset is. Like if you're getting into a syndication and it's for a strip mall or a large office building, well, investigate that market. Where is this building built, and what is the possibility of success for that asset? I mean, what kind of competition would that building have in that space? And just do a little investigating on your own so that you have a good experience with your self-directed account.
Yeah, great. So I definitely want to unpack the mechanics of how this kind of works for the audience and everything. But just to kind of tag onto that a little bit, what I really believe is a myth in the marketplace is that you are correct that you're taking on your own responsibility in terms of due diligence, in terms of, selecting the asset that you prefer to invest in. But there is a bit of a myth that if we just put it into the stock market, right, we think there's no risk, right? Because it's just this, really large thing. And I can tell everyone, firsthand, right, we actually had a sizable position in Kodak stock, right? That was about as blue chip as you can get. It was a direct investment, one of those unshakable things, right? And, completely went to zero overnight. And of course, there was no recourse or anything. So I think it's just important for investors to understand that there is risk in everything. Even putting your money inside of a bank account these days, right, has some degree of inherent risk. So taking on that responsibility for your investing and doing due diligence, whatever the asset class is absolutely critical, and to help you avoid any of those mistakes. And the more we can increase our financial IQ, invest in assets that we understand, that's when you reduce your risk, right? That's one of Buffett's rules, right? Investing in things that we understand. So with that being said, let's jump into the mechanics, because I know many of our audience actually have probably SDIRAs kind of working, or I would also venture to say that many of the audience still has a sizable portion of assets that are tied up in, some prior, 401k, some type of government sponsored qualified plan that may not be yielding them the best type of return. So if we want to think about this, and let's talk about this 101, Kaaren, right? So if you're new to SDIRA and kind of investing in this way, tell us about, how does it actually work, right? How are you guys as the custodian? What is the process to invest? What are, some of the compliance things that, people need to be aware of?
Right. That's a lot, but I like to break it down into the most simple components. And after you've done your due diligence, like we were talking about before, it's really 3 steps. You open an account, you put the money in it, you fund it, and then you invest. Open, fund, invest. That's easy to remember. So opening an account, we have a digital application on our website, takes maybe 10, 15 minutes. Funding the account can be done by transferring an IRA, maybe contributing from your own checkbook into a retirement account. Now, the contribution limits vary based upon your income, your age, and your account type. So you get the money in there, and after the account is open and there's money in it, then you can invest. And the way you do that is you obviously have done your due diligence, selected your asset, and you provide us what we call the supporting documentation. That would be the contract. Like if you're buying a house with your IRA, it's the offer to purchase. If you're investing in a syndication, it's the subscription agreement. If your IRA is lending money, it's the note, and if there's a security instrument, we need that too. So really open, fund, invest, provide us with the documentation, and then we will fund the deal ultimately. And then all the proceeds from that asset go back into the IRA that owns the asset, and any expenses are paid for by the IRA. So that is, in a nutshell, the whole self-directed process. Now, there are rules. We can get into those as well.
Yeah, got it. And give us an example of some of the asset classes just to kind of broaden everyone's perspective of what you can actually invest in through this vehicle.
Yeah, the number one asset class for our industry is the syndication. And the syndication is when someone goes to the SEC and obtains permission to raise capital. And so it really isn't an asset is it an asset? I don't know. But it really describes the underlying asset that they're raising capital for. So again, it could be a commercial building like multifamily. It could be maybe a mobile home park. It could be self-storage. Typically, it's to buy large real estate is what we see, large real estate projects. And that's really kind of cool because it used to be only the uber wealthy could have an equity position in a large deal like this, where there could be potentially a lot of upside. But through syndications, which have been around a long time, an IRA can have a fractional ownership of a big deal and enjoy those same kinds of benefits oftentimes. So there you go.
Okay, but also some additional things, right? You can also invest in precious metals. You can invest in Bitcoin or cryptocurrency, right?
Right through
And
our platform.
Okay,
Right through our platform, you can invest both in precious metals and in crypto. And it's nice that it's digitized like that.
Yeah. So I think that's probably a great way where, investors maybe want some exposure to precious metals, right? And, why not reallocate? We love to use this term, and it's kind of in my book, The Holistic Wealth Strategy, where we talk about repositioning assets. So as you really understand this whole world of alternatives and real estate and how the ultra wealthy actually invest, they don't have 100% of their portfolio sitting in, Wall Street based equities and bonds, right? We're looking at these other things. So you can actually, reposition, right, some of that existing kind of IRA money you have, leveraging the SDR IRA, which is a great thing. The other thing that I think is interesting as well, and now correct me if I'm wrong, but you can invest into businesses, or can you potentially start your own business using self-directed IRA? How would that work?
Right. Well, that's where we get into the rules. The rules are keep away from prohibited transactions.
Okay.
So if you want to really understand prohibited transactions, it's in the Internal Revenue Code, little light reading there, but it's IRC 4975 that goes deep on that. But you're not going to invest in an asset you have personal use of. So your IRA is not going to necessarily invest in a business that you own. Now, there is something called the Rob's model, and we can go down that rabbit hole, but you don't have personal benefit from your IRA owned assets. So you need to keep things arm's length. And there are people who are disallowed to the IRA, and they're your family members, largely your close family members, your parents, grandparents, you and your spouse, your children and your grandchildren, plus a 50-50 business partner too, and a fiduciary to the plan. They are all disallowed. So your IRA doesn't do business with them. Your IRA doesn't lend money to them. They don't benefit from that, from your retirement account. And that's summarizing a larger topic. But yeah, those are some of the rules.
Got it. Are there other things that investors should be aware of, right, when making investments through this vehicle? So one thing that would come to mind is paying particular attention to UBIT. So can you break down, how that works, and if there's anything else people should be thinking of?
Yeah, UBIT and UDFI are really a favorite topic because when I'm on podcasts, because it is so misunderstood. So I'll give you another like chapter and verse here. The IRS has a website. It's irs.gov, and you can look up Pub 598, Publication 598, if you wish to go deep on your own, personal time. But essentially, these are taxes. It's not income tax. So we say that an IRA is tax free or tax deferred, and that means it's income tax free or tax deferred. But when an IRA acquires proceeds and those proceeds were earned due to leverage, this UDFI tax can come into play. And so I'll explain. Say your IRA bought a house for $100,000, but the IRA came in with $70,000 and the other $30,000 was borrowed. So 30% was borrowed money, was debt. 70% came from savings. So here comes $1,000 rent check. Well, 30% of that was earned because of leverage. And that 30% is what would be subject to the UDFI tax, unrelated debt financed income tax. And that rate can be between 17 and 37%. It's around the trust rate. So I recommend before you get into a deal that has leverage, and I have one more thing to say about this, but before you get into a deal that has leverage, discuss this with your tax advisor. Say, hey, look, I'm a self-directed IRA investor. I'm getting involved in this because an IRA needs to file what's called a 990T. Like you and I, we file a 1040 when we do our taxes. An IRA files a 990T. So does your tax advisor understand this, and can they assist you with this process? So yeah, it's this is UBIT and UDFI. What UDFI is a little different. It's when an IRA invests in an active business, and the tax rate is the same. It's like if your IRA were to, say, invest as an equity member in like a nail salon or something that's an active business, that could throw off UBIT tax. We had an example back when I very first opened UDirect, when people could buy rental properties very inexpensively, and they were flipping. And flipping is active income in an IRA. So it's seen that your IRA is running a business, and that triggers the UBIT tax. So these are taxes you need to be aware of. But the other thing I was going to say is when UDFI can be a surprise, and that is in a syndication, because an asset sponsor is going to have a capital stack, right? They're going to have different layers of capital in their deal. Some will be retirement accounts, some will be their own cash, and some will be debt. And that's very normal. So if your IRA has an equity position in a syndication, and that syndication is also working with debt, the profit that the IRA earns from that syndication came from debt, and UDFI tax will get passed along to the account holder. And so you've got to know when you're in a syndication, and you may not know. It's not uncommon for this not to be disclosed. So you have to ask up front. But then the IRA would file a 990T, and sometimes you can write off expenses and you don't have to actually pay tax, but you do have to examine it and file the form when your IRA earns profit or proceeds due to leverage.
Hey, it's Dave Wolcott here. Let me ask you something. Are you tired of the same old financial advice that leaves you spinning your wheels? If you're ready to discover the real secrets the ultra wealthy use to build unstoppable wealth, then I've got something just for you. My new book, The Holistic Wealth Strategy, is your ticket to learning the proven strategies that the top 1% don't want you to know. This book isn't just about money. It's about building a life of purpose, freedom, and lasting impact. And I want to give you a free copy. Visit holisticwealthstrategy.com and get yours today. It's time to level up your financial game and create the future you deserve.
Yeah, no, great points. And this is why it pays to have a great CPA on your team. And I recommend for people to definitely work through the math, because you also have to look at the total return, right, of what's being projected. And oftentimes, I think, UDFI and UBIT can actually be kind of overstated. People think, right, hey, I've got so much tax on this, but it's actually a lot less than you might think when you look at your proportionate amount of what that could be. But certainly a key consideration, right, when, using the vehicle. Are there any other circumstances in which people should be thinking that this is either, the right platform for them to invest through or the wrong one, right? So, yeah.
Yeah, the barrier to entry to have an IRA is simply to have earned income. Okay, so that's a low barrier to entry. I mean, anybody with an active job, anybody with a paycheck can have an IRA and contribute to it. So if you want to self-direct, then I think that barrier to entry before you self-direct is to understand your asset class. Don't invest in an asset that you don't understand. And by the way, at UDirect, we offer a 20-minute free consultation. So you can call us, tell us what you're looking to invest in, talk to us about the deal, and we're going to listen to you and listen for, hey, are they committing what we call a prohibited transaction? I sort of mentioned that briefly, what those are, so that we can talk to you about your deal and if it's suitable for an IRA, if you really, might want to go forward with it, or if there's something to be aware of. But the barrier to entry for a self-directed IRA is to know your asset, I would say.
Yeah, for sure. Now, one asset that's kind of coming to my mind for me to think of as an example for people would be, let's say you're investing in an oil and gas syndication where you're looking for that active income offset, right? So in
Right.
this case, it wouldn't really make sense to use your self-directed IRA, right? Because
Right.
you would be an active general partner to be able to receive the active income offset. So you don't want to be using the SDIRA for that type
That's
of
true. I've
investment.
seen a lot of oil and gas companies address that, and by having two different kinds of ways to invest, like maybe a fund or
Yeah.
something like that, where it is passive and that an IRA could invest. So it doesn't mean you can't get into that industry. It just means you have to make sure that it makes sense.
Yeah, and how the deal is structured, right? Because some of those, right, like mineral rights and things like that, just definitely kick off, nice passive income or some working interests into. And in fact, I actually had invested in oil and gas like back in 2000
Mhm.
through self-directed IRA, and it was just continuous passive income through a working interest, right? So it kind of depends a little bit on the business model and how you're trying to take advantages, those tax advantages. But definitely, these are questions that investors should be thinking about, right? If you're trying to, leverage this platform.
I really love what you said at the beginning when you talked about diversification. I think that is always the key. If any financial advisor will tell you to diversify, won't they? I mean, that is really important because we never know when a black swan's going to pop up. A lot of syndicators didn't know that, oops, all of a sudden in 2022, the rates were going to pop through the roof, right? We didn't really foresee the Great Recession, and other things. We didn't foresee COVID and how that would impact the economy. And I love when I see our account holders diversify because it helps them weather the storm, and that gives them a more stable retirement base to go from. Because of course we're trying to plan for a future where we have no idea what that future is going to look like or what we're actually going to need, but we have to do the best we can with what we've got at the time.
It's such a great point, Kaaren, is, really, I think that's another Wall Street myth, really, is the way they define diversification, which is, let's take all your money and then let's spread it across 100 different equities. We'll throw in some bonds in there, right? And then we're going to do small caps, large caps, some international, right?
Mhm.
And then they call that diversification, right? Tom Wheelwright likes to call that diversification, right? Because it's really just, because they don't know what's going to happen. So you're spreading it across, all of these different equities, and then you're really just going to get the average. But if you look at groups like endowment groups or Tiger 21, right, and how they're actually allocating capital or inside of family offices, it is truly inside of different asset classes like real estate, alternatives. And the other thing, that's really, an important consideration when you're doing portfolio construction is that, once you can achieve that accredited investor status, you're actually exposed to much better opportunities, that can actually outperform the market. When you're investing in the market, you're buying as a retail investor. So to me, I always think about it, it's like when I walk around the mall with my wife and, she wants to buy something, and it's like you're paying 10x, through the teeth to buy something there. But when you go through a syndication, typically you're buying really wholesale because you're working directly with the sponsor, and that's how you can get better returns and such. So
Yeah, and you're sharing the risk
diversifying.
with the sponsor, which is why you're getting that discount, right?
Yeah, exactly. So I think it's really, it's really amazing. I really applaud your mission and being able to help educate people and understand that there's a different vehicle of how they can actually reposition their assets to do that diversification, and also, support some different goals that people have, those, whether that's the retirement goal, financial independence, or things. It gives people much more flexibility to get back that overall control of their financial future.
It really, really does. And in fact, if anybody is looking to learn more, I did write a book this year that was released with Bigger Pockets. I have a copy right here, so I'll show you. It's the Bigger Pockets Guide to Self-Directed IRA Investing. And you can find this. It's an easy read. It's a guidebook, not a storybook. It's a guidebook so you can flip through it with an index and find what you need to find. But it's on Amazon and the Bigger Pockets website. So if you want to go deep, that's one way to do that.
Okay, awesome. We'll make sure to link that into the show notes. Do you have a specific URL you want to throw out?
Well, you can find it at just Amazon.com, I think, or biggerpockets.com/SDIRA for self-directed IRA.
Yeah.
And and that's where you'll find it. And there's also a Kindle version.
Yeah. Okay. Awesome. Can you elaborate on any other myths around investing through a self-directed IRA that could be out there?
Recently I was on a podcast and it went viral. It was really great. And there were so many comments like, oh, you can't do that. And it really brought to light, because of course, this is my little tunnel vision. I do this every day. And how do people not know this? But people really don't know that you've been able to self-direct for 50 years. So I would just say that there's a lot more to it than you may realize. Research it. And one of the things we were talking about asset classes, and it dawned on me that while we were talking that, like never before, we can go on the internet, we can YouTube things when we're interested, and we can listen to a conversation like this and listen to people's thoughts and learn more about assets. For example, dig into oil and gas and hear a conversation about it. It's not just reading something in the paper or going to the library and checking out a book. I mean, it's the world where we can find out pretty much anything we want to know right away. So take advantage of that and educate yourself to build your future, because you can certainly do it. All the information is free to you. Just go find it and build your wealth.
Yeah. Now, Kaaren, I'm assuming that you eat your own dog food and you are investing in alternatives and using a self-directed IRA as well. So can you share with us a little bit about, your portfolio and,
Sure.
some of the asset classes you're preferential to?
So I've invested in several notes, being the bank. That's happened several times. And also syndications. You can imagine what crosses my desk, quite a lot of things. So sometimes I'll invest in a syndication, but also precious metals. I really like precious metals because, it is a hedge against inflation. US minted coins. In fact, the guys at Delaware Depository call me a silver stacker. The silver comes in a little container and it's all stacked up. So these silver eagles, it's currency. But, in a pinch, it's also a metal that has industrial use as well. If it was melted down, it has industrial use. So it's got different kinds of value. So I like precious metals as well. So those are some of the asset classes I personally invest in.
Okay.
Plus single family homes, on the side.
Yeah. Yeah. And, what's your take on the economic cycle? Where are we in 2025? It's been super, quite a roller coaster, which is completely an understatement. And it will continue to be. But, if you, I think I asked you to bring your crystal ball today. So any thoughts in terms of, where interest rates are kind of heading? Will the Fed be actually forced out? And, what are good places, investors should be thinking about investing right now?
Well, Dave, I will tell you, I am not an economist and I'm not an expert on this. I read the same things, the same headlines, the same articles that you read and that your listeners read. And what I read is that, Trump wants to take the rates down to 1% and fire Powell. So we'll see what happens. The thing of it is I know for sure it will change. That's what I know for sure.
Yeah.
But you say nobody has a crystal ball, of course. But we have to plan regardless. Regardless of what happens, we still have to set our sail and just, like hope for the best. But also, the more planning, the more due diligence that you're doing, the more that you do create your own map and really, do a mind map about what you're doing and look at the different asset classes and how they perform, and you're diversifying, then you've got a pretty good chance of doing well.
Yeah, for sure. Now, it's been an amazing lesson in the entire commercial real estate industry. I mean, having this unprecedented rise in interest rates that the Fed really artificially created, I think took out 90% of the commercial real estate industry. And that's why we are all seeing such pain. So some really great assets, great operators with good models just have completely gotten blindsided. So,
You know who else has
lots.
been blindsided, if I may add?
Yeah.
That is self-directed IRA holders that had those syndications, because now there were capital calls. And in a self-directed IRA, you need to leave idle cash if there are expenses. A capital call is one of those expenses, and it's typically not a small expense. And either you come up with the money and keep your position, or your position is lowered in that deal. So that is a risk you take, and a lot of syndication investors may not have realized they were even subject to a capital call.
Great point.
But from what you're saying, that is exactly what we see on this end.
Yeah, and this really ties back to, this whole topic we've been centering on, which is diversification, right? So as much as we love real estate as an asset class, again, great reason why you don't want to put 100%, of your eggs in that basket either, because you've got interest rate risk. One of the asset classes that we have really, continued to watch and have stronger interest in is private credit. And we've been doing kind of private credit, or really merchant cash advances that are completely non-correlated to the market. There's no interest rate risk. The payback period, and I'm sure you understand this, right, from your background, but we're seeing returns that are almost triple what you can get right in the market, and people are paying. The average length of those loans is only 7 months, and you're making back principal and interest on a daily and weekly basis. So the velocity of money is fantastic. And I think leveraging the way, and I'd love to get your thoughts and perspective on this one, Kaaren, because when I think about that, right, we're always talking to our clients and investors, and, they want to retire quickly. They want financial independence quicker, right? So how can we either increase our return, reduce our taxes, right, get there quicker? And when I look at it at the end of the day, I think maybe, conservatively, maybe you're making 7.5% if you're in a traditional 401k, right? And that's probably before fees, taxes, and inflation, right? Which probably brings you down to like 3 or 4%, right? So, in this asset class, you can perform like over a 20% return, right? I mean, that's massive in terms of the speed of, and the velocity of money. So if you reallocate into a self-directed IRA, diversify, increase, your yield, you'd be amazed at how quickly you can hit your goals and also increase where you want to be in the future.
It really points out how creative investors are that you're doing this. And now, of course, I've heard of this before, but not very often. But this is such a creative way to earn, to make money on money. I think it's a great idea. But that's not for everybody. It's for somebody who understands it. But again, so many creative alternative assets. And what alternative means is not the stock market, non-market correlated assets. And there are just so many, and you've got to go out and find the one that works for you and the one that you understand. But the nice thing is we have the freedom to self-direct. It's something we get to do and invest outside of Wall Street. We haven't been restricted that these accounts can only go into this asset. And again, for 50 years, you've been able to diversify your IRA into alternative assets. People don't know that. This is the 50th anniversary of ERISA, which is the Employment Retirement Income Security Act. 50 years you've been able to take your IRA and lend it to someone, secured or unsecured, and have your IRA receive that return. And it's just nice to have the opportunity to talk about it and broaden the audience and broaden the number of people who are aware of that.
It's quite comical to me, right, that they talk about it as alternatives, right?
Yeah,
When
right.
real estate, I think, is probably one of the oldest asset classes, since the
Yeah, I've
dawn
got a
of
cave
time.
over here. Yeah, exactly.
Yeah,
Yeah.
exactly, right? But that's how Wall Street labeled it that way because, they're not, they don't get compensated for it. So
It's a
that's
spin, isn't it?
yeah, yeah, it really is.
Yeah.
So it's quite fascinating. Well, this has been an excellent conversation, and I hope has illuminated some insights for the audience. If you could give just one piece of advice on how the audience could really accelerate their wealth trajectory, what would it be?
I wouldn't give that advice. I'm not a financial advisor. I'll leave that to you. In the self-directed IRA world, we don't present ourselves as financial advisors because for the most part, we're not licensed, and that's not our role to give financial advice. Our role is to facilitate self-directed IRA accounts and to custody those funds and to give you the opportunity to use them. When it comes to financial advice, talk to somebody who is a financial advisor like yourself, or like someone who has a 6, a 63, a 7, or something like this, where they've studied the markets. And again, the internet is just the oracle of all human knowledge. Just educate yourself.
Yeah, for sure. No, great advice. And just disclaimer, I am not a financial
Oh, okay.
advisor. Yeah.
All right.
Right. We are really focused on educating our audience on alternatives and different ways to actually accelerate wealth. So this has been a really great discussion, Kaaren. I can't thank you enough for your time. If people would like to reach out and connect with you, or perhaps set up an account, what is the best process for them to do that?
Right. Well, we are all over social media, so you can find us on, Instagram and LinkedIn and all the regulars. Our website is the letter U, udirectira.com. And I got to tell you, it's sort of like an analogy with U-Haul. This is what I was thinking when I created the name. With U-Haul, they don't move your furniture for you. Like, we don't tell you what to invest in, but they give you the truck so that you can load your own stuff. You haul and you take care of yourself, but they give you the truck. Well, it's similar to that, where we're not telling you what to put in, but we're giving you the vehicle to use to grow your retirement. So if you think U-Haul, think U-Direct, and that's how it works. So udirectira.com is how you find us. Schedule a consultation. We'd love to talk to you about what your plans are and answer all your questions.
Very clever. Thanks again, Kaaren.
Thank you.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.